Imagine waking up one day to find your savings have doubled in value. Sounds like a dream, right? But what if I told you this could be your reality with the right investment strategy? Too many people leave their money sitting in savings accounts, earning next to nothing. Today, we're diving into the world of gold saving schemes and whether they are the best way to invest in gold. Is this the key to unlocking financial security and potentially supercharging your returns? Stay tuned as we explore this golden opportunity. All right, let's break down gold saving schemes. Imagine this. You want to invest in gold, but the thought of physically buying and storing it seems like a hassle. That's where gold saving schemes come in. They essentially allow you to buy and hold gold without the headache of physically dealing with it. Think of it like a subscription service for gold. You make regular payments, and in return, your money is used to purchase and securely store physical gold on your behalf. It's like having a digital vault filled with gold bars, but without the risk of someone breaking in and stealing your stash. Now, let's talk about why you should even care about gold in the first place. We live in uncertain times, my friends. Inflation is soaring, the stock market can be a roller coaster, and having all your eggs in one basket is a recipe for disaster. Gold has historically been seen as a safe haven asset, a hedge against inflation and economic turmoil. When the market takes a nosedive, gold tends to hold its value or even increase in price. It's like that reliable friend you can always count on, no matter what life throws your way. But here's the thing, not all gold investments are created equal. Buying physical gold can be risky. You have to worry about storage, security, and the hassle of selling it when you need to cash out. That's where gold saving schemes come in with a compelling alternative. They offer a convenient, secure, and cost-effective way to invest in gold. You don't need to be a millionaire to get started. Many schemes allow you to begin with a small monthly investment, making it accessible to everyone. Think of it this way, you're not just buying gold, you're buying peace of mind, knowing that you have a portion of your wealth protected in a tangible asset that stood the test of time. But let's be real for a second. Some of you might be thinking, is gold really a good investment? And that's a valid question. While gold has historically performed well, especially during times of economic uncertainty, it's not a get-rich-quick scheme. It's a long-term strategy, a way to preserve your wealth and hedge against inflation. Now, let's dive into the specifics of how these schemes actually work. Most gold saving schemes are offered by banks and financial institutions. You sign up for a plan, choose your investment amount, and the institution takes care of the rest. They purchase gold on your behalf, store it securely, and track its value. You can even choose to receive physical gold at the end of your plan term, although most investors prefer to sell it back to the institution for cash. The beauty of gold savings schemes is their flexibility. You can choose to make regular monthly payments or invest a lump sum amount. You can also withdraw your investment at any time, although there might be some fees or penalties depending on the scheme. But here's the kicker. Gold savings schemes often come with additional benefits. Some institutions offer insurance coverage for your gold, protecting you against theft or damage. Others provide tax advantages, allowing you to grow your wealth more efficiently. And of course, you get the peace of mind knowing that your investment is backed by a reputable institution. So, while gold savings schemes are not a magic bullet to instant riches, they offer a compelling way to diversify your portfolio, protect your wealth, and potentially profit from the enduring value of gold. Let's dive into why gold saving schemes might be your golden ticket to a more secure financial future. First and foremost, they offer unparalleled convenience. Think about it. You don't need to scour shady pawn shops or worry about storing your gold in a safe at home. With a gold savings scheme, everything is taken care of for you. It's like having a personal gold concierge handling all the logistics while you sit back and watch your investment grow. And speaking of growth, let's talk about the potential returns. While past performance is not indicative of future results, gold has historically delivered impressive returns, especially during times of economic uncertainty. Remember the 2008 financial crisis? While the stock market was plummeting, gold soared, providing a much-needed lifeline for investors. And with inflation running rampant these days, gold is once again proving its worth as a safe haven asset. But here's the thing, gold is not just about profit, it's about peace of mind. It's about knowing that you have a portion of your wealth invested in a tangible asset that's been valued for centuries. It's about having a safety net, a hedge against the unknown. And that peace of mind, my friends, is priceless. Now let's talk about another major benefit: security. When you invest in a gold savings scheme, your gold is stored in secure, insured vaults. These vaults are like Fort Knox on steroids, equipped with state-of-the-art security systems and monitored 24/7. You can sleep soundly, knowing that your investment is protected from theft, damage, or any other unforeseen circumstances. And because your gold is held in a segregated account, it's not affected by the financial health of the institution holding it. Even if the institution were to go bankrupt, your gold would be safe and sound. But wait, there's more. Gold savings schemes also offer incredible flexibility. You can choose to invest as little or as much as you want on a schedule that suits your budget. You can make regular monthly payments, invest a lump sum amount, or even add to your investment whenever you have some extra cash. And if you ever need to access your funds, most schemes allow you to withdraw your investment at any time, although there might be some fees or penalties involved. But here's the best part. Gold savings schemes are not just for the ultra-wealthy. They're accessible to everyone. You don't need to be a Wall Street tycoon or a gold-toothed rapper to get started. Many institutions offer plans with low minimum investment amounts, making it easy for anyone to start building their gold portfolio. Think of it like this. You're not just investing in gold, you're investing in your future. You're taking control of your finances, building a more secure tomorrow, and positioning yourself for financial success. The more informed you are, the better equipped you'll be to make the best decision for your financial future. Now, let's address the elephant in the room. How do gold savings schemes stack up against other investment options? Well, the truth is, there's no one-size-fits-all answer. The best investment for you depends on your individual financial goals, risk tolerance, and time horizon. But here's the thing. Gold has consistently proven itself as a valuable asset class, offering diversification, stability, and the potential for long-term growth. Let's compare gold to some popular investment options. First up, we have the stock market. Now, don't get me wrong, the stock market can be a powerful wealth-building tool, but it's also inherently volatile. One day, you're riding high on record profits, and the next day, you're staring at a sea of red. Gold, on the other hand, tends to move independently of the stock market. When the market takes a nosedive, gold often acts as a safe haven, holding its value or even increasing in price. This makes it an excellent portfolio diversifier, reducing your overall risk and potentially boosting your returns. Next up, we have real estate. Now, real estate can be a great investment, but it also comes with its own set of challenges. It's illiquid, meaning it can be difficult to sell quickly if you need to access your cash. It's also management intensive, requiring time, effort, and often unexpected expenses. Gold, on the other hand, is highly liquid and requires minimal management. You can easily buy and sell it through a reputable dealer or financial institution, and you don't have to worry about tenants, repairs, or property taxes. Now, let's talk about bonds. Bonds are generally considered less risky than stocks, but they also offer lower potential returns. And with interest rates at historic lows, the returns on bonds are even less appealing. Gold, on the other hand, has the potential to deliver higher returns, especially during times of inflation. And finally, let's not forget about good old-fashioned cash. While it's always wise to have some cash on hand for emergencies, keeping all your money in a savings account is a surefire way to lose purchasing power over time. Inflation slowly erodes the value of your cash, making it harder to afford the things you need and want. Gold, on the other hand, has historically held its value against inflation, acting as a store of wealth for centuries. So, where do gold savings schemes fit into all of this? Well, they offer a convenient, secure, and cost-effective way to access the benefits of gold. They allow you to diversify your portfolio, hedge against inflation, and potentially profit from the enduring value of gold. But here's the key takeaway. Gold savings schemes are not about timing the market or chasing quick profits. They're about playing the long game, building a solid financial foundation, and positioning yourself for lasting wealth. So, if you're looking for a way to diversify your portfolio, hedge against inflation, and sleep soundly at night, knowing that a portion of your wealth is protected by a timeless asset. Then gold savings schemes might just be the golden ticket you've been searching for. So, is a gold savings scheme the best way to invest in gold? It certainly has its advantages, but the choice ultimately depends on your financial goals and risk tolerance. Remember, diversification is key. Don't put all your eggs in one basket. Explore your options, do your research, and make informed decisions that align with your long-term financial plan. If you're serious about making wise financial decisions, don't miss our next video on the top 5 ETFs to invest in 2025. Click on the end screen to watch now and take the next step towards a wealthy lifestyle.